Okay, shall we start? All right. Okay. Again, hi guys. Welcome everyone to the Wednesday webinar. So today's topic is about 7 common mistakes for the new trader. So basically, this topic is just about, let's just say chit chat. Okay. If you have any question, okay, along the way, either you can send in at the chat box below here, or if you zoom in, if you join in Zoom, just send in the chat box or Q&A. All right. And okay. Disclaimer first, all right, as usual, remember that everything in this video is educational in nature. Okay, nothing should be construed as investment or trading advice. If you guys want to trade, please do your own due diligence before you guys trade. Okay, I want to highlight the risk warning over here. Trading Forex and CFD may carry significant risk to your capital and it may not suitable for all investors. So please come and join the webinar and learn together. All right, the speaker for today, my name is Peggy. I'm an investment analyst and a proprietary trader as well. This is some certificate that have passed all the challenges. Okay, and that's the agenda for today. Basically, just want to share with you guys how I manage or how I survive in the forex market and how I become, can just say like, consider I myself a successful trader. Okay, I will share with you guys as well, like when I was a newbie in the forex market, what mistake I made. Okay, so the today topic just want to talk about not having a trading plan. What is the result? You don't put the stop loss, what is the result as well? No risk management. So basically, just all these agenda here I will cover and share with you guys my experiences as well, like chasing stop loss when you get the stop out, and then how you're going to prevent the trading. That one also in the slide as well. Over trading, or if you're over trade, over loss side, this one is one of the mistake that we the new trader make. Okay, ignoring fundamental, which is if you are a trader, you should know the fundamental, the key fundamental, which is our chat with you guys as well, and not keeping the trading journey. I used to do that, but not nowadays. But if you are a newbie, you should keep your trading journal. Okay. Oh, what happening here? Okay, so now not having a trading plan. So what is the result? Inconsistent result. So basically, if you don't have a trading plan, you have lack of strategy. So trading without a plan often mean trading without consistent strategy that lead to erratic and unpredictable result. So basically, I just share with you guys what I do daily because I'm a full-time. I'm not a full-time trader, but I'm working full-time, and then a pastime is trader. But sometimes I don't trade during the Asian section. So basically, what you need to do daily, okay, your trading plan, like you say, ignoring fundamentals. So basically, this is the only website that I check for the news. So only for like factory, but there is some of the trader they are using what is that, investing.com. Okay, so basically I just want to stick to only one website, which is for like factory. So every day in the morning, okay, before I start work like 9:30 a.m. Singapore time. Okay, so I check the news, which is this entire week, we only need first week of every month, there will be a lot high impact news. So you need to take notes of that. And tonight, okay, for example, tonight we do have like, not tonight, today. This is, you just change the time zone according to where you live, but based in Singapore, so I just change the Singapore time. Let me just change back to UTC. Okay, just stick to, okay, UTC here. Okay, for today, Wednesday, we have a high impact news, which is ADP. Okay, you trade gold, EU, USD, whatever with dollar side here, you need to take note of that. This is high impact news. But tomorrow there is a public holiday for USD, for the, so I don't think you will see, you might see the less volume like tomorrow because of bank holiday. Okay, and Friday we have non-farm payroll. Okay, if you like the trade news, okay, you have to take note of this high impact news. So basically, if you're a newbie, Over here, you can just, you know, filter out. Usually I just ignore those like red, yellow and like gray color here. So I just want to know which high impact news that is take note of. So this is the only website I see the news, not others. Okay, the less is the better. Okay. And emotional trading. So let's say if you don't have a trading plan, you just it's like you do a coin flip, right? And then you want to buy or sell, you think, okay, I think it's a good level to buy or sell. And then let's say if you don't manage your emotion, you have like impulsive decision, meaning that without a plan, the traders are most likely to make impulsive decision based on emotion rather than logic and analysis, which is I used to do that. Okay, when I enter to the forex market, I trade during news, those like non-farm payroll. I don't know how to manage my emotional. So basically, it hits stop loss, I just have a revenge trading. I revenge, and at the result, we know that I roll my account. Okay, I lose the capital, I lose my profit, and then I realized that you need to have trading psychologies. If you don't know about it, you need to go and learn what your trading psychologies. Okay, and then you will be one of the successful trader in this forex market. Okay, increase your risk. So not having a trading plan definitely will increase your risk. Okay, you want to buy, you want to sell, you don't have a trading plan, or you don't have any strategy how you're going to survive in this forex markets, right? Uncontrolled risk. A trading plan includes risk management. Okay, so you need to know how to calculate risk management, which is where you're going to put your entry, where your stop loss, where is your take profit, what is position size thing based on your 100k account. Let's just say 1k account, let's say 1000 account. If you want to buy and sell, what is your position sizing? Either you put one lot for gold that is reasonable or not. To me, if you have only 1k account and then you want to trade gold, you put one lot. Yes, you can put one lot. That is a maximum lot size that you can use. For example, if you want to short gold right now, based on only 1k account or 1000 US dollar account, 1k that is the maximum loss size that I will put for gold. But where your stop loss based on this level, for example, you identify your key level here. Okay, let's say I already have my trading plan. I want to sell at this level, and then you have to ask yourself where your stop loss. Excuse me, you want to put your stop loss just slightly above here. What is your position, your lot size? Let's say I put here one lot. Let's say you put one lot like the sell entry over here. You put one lot right here. Like you put one lot here, one lot, right? Price reward 50 pip. How much you gonna lose? How much you gonna lose? Do you know that? Wait, somebody asking me a question? Or why you raise your hand? Okay, maybe accidentally. Okay, never mind. So for gold, you need to know how to calculate lot size based on 1000 account. Okay, you put one lot price reward 30 to 50 pip, you will lose 300 or 500 account, which is 50% of your capital already. Okay, so usually I recommended you, if you trade gold based on only 1k account or 1000 US dollar capital, you should put for gold, I don't put one lot. Okay, I like to have a multiple entry, which is I will put. But if the price keep going, usually I go to lower time frame. Okay, you should just put to me 0.1. Okay, max you can go for 0.1, which is at least 5. That will maximum is 0.5. This is a maximum lot size for me, which is 100. 1,000 account USD dollar for my capital. So this is my maximum 0.5. But if price is, let's say, I identify or I put my stop loss over here, I will do martingale, okay? If you know how to trade with martingale, and then if you know how to manage, okay, the position sizing, maybe this level I will have another kind of like the sell entry right here. Let's say I have like 0.5, 0.5, 0.5, the maximum 0.3, and maybe the last entry, which is I will put at 23.45. If price come here, I will put 0.70. Okay, so the maximum I have is how many? One lot. Okay, where is my SL? I just put at this level, which is LV. I will put at 23.47. So the 0.7 here, if we hit my stop loss, I will just lose about how much? 140. Okay, maybe 140 because above 45, which is 20 pip, 140. 140 plus this one, maybe if hit the stop loss, I lose less than 500. Okay, less than 500. Okay, that's all right. So that is 50% I'm willing to lose. So you trade Forex, you might have the mindset of how much you're going to lose, how much you're willing to lose, not how much you want to win, based on that capital. Okay, if you always think that okay, I put in 1,000 and then I want to earn 5K. 5K, if you want to earn a profit with 5K, you need to put the like the time frame. Once you want to earn within 1 month, that is impossible with account 1K, and then 1 month you want to earn 5,000. If you good, then it might possible, but you might have kind of like over trade. Okay, but if you put like okay, maybe I invest 1,000, within 6 months, okay, I put a target of like 5K profit, and then trading plan based on the 5K, for example, you say that okay, 5K, I want to plan for the 6 months. So the 6 months, how many days? Which is you divide by 6, you divide by 5,000, you divide by 6, you divide by 20. So per day is 46. That is possible though. 20 plus 20 times 6. Okay, that is achievable. Okay, you see that if I plan for 5K, my profit within 6 months, so per day I only have to earn like $50 per day. That is achievable. Okay, achievable for $50 per day within 6 months. You have a profit of 5K. That is achievable. So you should have, I recommended you should have at least 2 to 3 accounts if you trade forex, which means first account is for like swing trade. For swing trade, you hold the position longer. The second account which I have is the day trading, meaning I close the position within the day, and then the another account is for scalping, and I have another like 4 account, which is the last one, special one, which is my new trading. Okay, my new trading, which is I will use the profit for the entire week or entire month. It depends. I know that there is a new that I want to trade this week. Okay, so I put on the account, which is 1,000. I want to trade non-farm payroll. This is month 1,000. I don't have the SL. My SL is 1,000, which is I'm willing to lose. This is my account for me to trade news. Okay, this is the money that I'm willing to lose. So if I want to trade the news, I don't use my like the main account. I will use the account for my trade during news. So I recommended you to just have like at least 2 to 3 the account. One account is for your daily expenses, like okay, you aim for $50 or $100. Once you hit your target, you can, if you have another account, you just change to another account to trade. Don't put your capital in one account and then you use the account to trade scalping, swing trading, and new, because eventually you might blow everything or lose your account. Okay, and lack of discipline if you don't have a trading plan. So you need to have the structures, you need to have discipline. You set a target per day, how much you want to earn, $50 or $100 or 1,000. It depend on your capital side, on your, depend on your account size as well. Okay, don't be greedy. Okay, because I personally have not okay, like during my afternoon section, which is that New York section. Okay, I have a plan which is 1K. I already have profit, and then I get it. I think I want to earn more. Maybe I want to earn 2K. So during the New York section, I lose my profit 1K. I lose my capital another 2K. A few times until I realize that I need to stay disciplined. I need to be firm up for myself that okay, one hits the target 1K, 2K, I need to close the computer. I don't look at the chart because the more you see, the more you want to trade. Okay, and doesn't mean that you look at the computer 8 hours and then you will earn more. Okay, the less is the better. Okay, so just have to stay disciplined. Lack of progress, so no learning path. So basically you need to have the knowledge. So basically, okay, I will show you guys how I pick all the strategy, because when I start forex journey or into this market, I don't know which strategy should I focus. I don't know which time frame should I pick. I don't know, should I highlight the key level on H4 time frame, daily, or M5 or M15. I don't know everything. I don't know where to start. So basically you start from the basic. Okay, you start from the basic set. You ask yourself first, what kind of trader you are? Are you a swing trader, or you a day trader, or you are scalper? Okay, if you know that you are day trade, for example, I consider myself day trade. Okay, basically you go to the chart. Okay, first thing, the first one, look at the calendar first. Second one, there's so many strategy out there. We know about ICT, SMB. There's so many strategy out there. But back to the basic, you need to know how to look at the key level. You need to know how to look at market structure. Basically, you go to, we just look at daily, but we don't. I don't identify the key level in daily time frame. Okay, I just want to see yesterday candle closed with what color. Either red or green, bearish or bullish. Where is the market structure here? Based on gold, okay, based on gold in high time frame, which is daily, we know that price is on downtrend here, right? You can, because they play a lower low, lower high, you need to know how to look at market structure here, lower low, lower high, or Dow theory. Or if you expert already in the SMC, ICT, they all look at market structure same. Okay, it's same meaning. You say, okay, then I go to H4. Okay, I identify the key level in lower time frame, which is H4 time frame. That is only time frame I highlight the key level, but I execute my trade in M15 because I go to the lower time frame. I want to see its price going to revert at the particular level. For example, based on, I will just give you an example here. Okay, you highlight first. Let's just identify the key level. Okay, that is the first one you need to know. A lot of the trader, okay, even in my community, they know ICT, they know a lot of like strategy. But when I ask them about where your key level, do you know how to identify? They doesn't know where is the key level. Basically, support and resistance. We know about support. We know about the resistance. If you talk with other people, you say that, okay, actually I trade only support resistance. Will look like you you like old people, because nowadays people don't call support and resistance. What they call demand and supply. Actually, the same meaning. But how you going to identify the correct key level, demand, supply, or support and resistance. Okay, basically identify the key resistance, where this is my key resistance for the first resistance, meaning that if price cannot break above 23.40, that is the key level. Why? You can see that one price break above the resistance. Okay, you can see the resistance. Now it becomes support, break because it very impulsive move here, pull back. This is a resistance level. Price come to a few 1, 2, 3, 4 times, right? Touches and then cannot break above. So this is my key resistance in H4. Okay, and they also have like 61.8% FIB level over here. And this is my kind of scalping. I put like first support here. Let's say this is my key level. Let's say if price break above first resistance, when your next key level, that will be here. Why I pick here, I will explain to you. This is my second resistance. Why? Resistance break above, pull back. Okay, break below, pull back again at resistance level, and I use Fibonacci level, that will be 78.6% above that, right? And here, if you go to the lower time frame, now I identify the key level, and then I want to short at this level. Why I short? Because daily time frame, I already see that I buy and sell for the higher time frame, so bearish. Okay, because in here price make a lower low, lower high. In head 4, I identify this as my key level. I want to find the opportunity to short. So my key level here, what about my M15? Go to the M15 based on this time, okay, this level. Okay, price come to my first resistance in the first time here. What I see here, I already easy, you see, bearish divergence, bearish divergence here, and then you short from this level. This another confirmation. You see that? The rejection here, price make a high, indicator it make a lower low. So if you don't have the knowledge, okay, if you don't know how to identify the key level, how you're going to trade. If you want to study or you want to learn those like SMC, ICT, yes, you can, but back to the basic. First, know how to identify the key level first. You know how to read the market structure. You know that you need to know how to read the candle. Those are price action really strong, powerful, which is over here, where is that? Like just now here, we identified this our key level, okay, based in head 4, okay. The confirmation is that price make a rejection. Price action is right here, pull back a little bit, and then, you know, price is kind of like make a high. But let's say you don't know about you don't know about divergence, bearish divergence. You see that you short here, for example, you short here, and then my price is falling up to this level, and then price kind of like, you know, make a high. From here they bounce off, okay, and then go to back to your entry, and then either you might get break even, or you just panic, you check it out, you just close the position, or either you kind of like put your stop loss price falling, and then you shift your stop loss to break even right here. From this entry, we short at this level, price hit your stop loss or break even, you earn nothing. Price go back to this level, rejection again. But if you know how to trade with divergence, even though price falling, this is your key resistance level in what higher time frame. So higher is better than M15, right? We come to M15 because we want to execute the trade over here. We want to see the price movement right here. Okay, so price reverse again, still within our zone, which is this our sell zone, right, in head 4, and this line is your 61.8 retracement. Price go back, make high, but I showing you the lower low. So you know that price make a high, indicator make lower low. That is a divergence here, meaning that they're telling you that I'm going to, you know, revert or falling from this level. So please come and join the trend, for example. Okay, I just want to make fun only, okay? And then you can see that price is falling. And here you earn a few pips from 23.36 to week here, let us say more than 100 pip, okay, from this level to this level. Okay, so this is how you trade. Okay, so basically identify the key level and go to M5, M15 to execute your trade. Any question? Anyone don't trade with the divergence, you will miss out a lot because divergence is very powerful. So if you don't know what is divergence, you can just Google, because there will be classic divergence and hidden divergence. Hidden divergence is very powerful, but very rare you will see. But if classic divergence, which is price make high, indicator is make a lower high, that is a bearish divergence. If price make a lower low, indicator is make a lower high, that's a bullish divergence. Okay, this is the level. Any question? Okay, so please study. When you identify the key level, and then you can just go and study any other strategy. But I just want to share with you guys, those strategy ICT and SMC basically is the same. You need to know how to look market structure. You wait for market structure shape, meaning that if you study price make a lower high, this is a low, price break below this one. Okay, we will wait to we want to sell somewhere at this level. Okay, for the ICT or SMC, they need to break below this one in the lower time frame, and then we execute the trade in M5 or M15. Okay, so identify the key level. if you're interested in or you want to learn those like Elliott wave, I learned the Elliott wave before, but to me, I study, but I, different people count different waves. So I'm not master. I mean, I'm not really master in Elliott wave, but I know how to count. But again, if you want to trade based on Elliott wave, right? Me and my comedy, they will argue each other because different people they count different wave, right? So again, if you want to master, good. Okay, you just pick a strategy that you find that is make money for you. You just stick to that strategy. Okay, just go and study. That's all. Example of simple training plan. Again, I just mentioned that you need to set a goal. Okay, based on daily goal, monthly goal, yearly goal, you need to set 5% monthly, 1% monthly. If you set like 10% monthly, you will feel really stressful. So trading shouldn't involve the stressness, right? So just maybe put 1% or 2%, 3%, which is very achievable for your goal. Okay, risk management, you should listen. Okay, it depends on the person. Okay, this one I don't want to say like you shouldn't risk more than 1% of your capital, but if you're a newbie, yeah, you should not risk more than 1 to 2% of your capital. But also it depends on your capital as well. To me, maximum I risk my capital 3 to 4%. It depends on if I have really confident on my trade setup, I risk 3 to 4%, not 5%. Max is 4% on my capital for the risk management. Okay, but if you still newbie, 0.5 to 1%, that should be within this one. But if you very confident on your strategies already, you can just go back to 2% or 3%. But because if I confident, I can go to max 4%. Okay, it depends. All right, but if you're newbie, yeah, 0.5 to 1%, you should for the newbie. Okay, market analysis, right? So either you use combination of your like indicator. It could be RSI or moving average. If you follow me, usually I only use indicator, which is my indicator I'm using. I highlight, I identify the key level. I use Fibonacci. That could be Fibonacci retracement, extension, and projection. Okay, and I use the RSI. Where is my RSI? I think I delete. I use my RSI. Just want to see the divergence. That's it. Okay, that's all the any indicator. Some people Ichimoku cloud, you can do that because we want to see the momentum. You want to see like, price is on a higher time frame. You can use indicator EMA 200 as well. I explained. Okay. If you want to see indicator, let's say Ichimoku cloud for the, let's just say EU. Ichimoku cloud is a good momentum indicator for a currency pair. Basically, if price break below the Ichimoku cloud, you just buy a sell. You just hold your sell position until price is go, closer to the cloud here or break above here. You need to close your sell position here because price is going to change downtrend or bearish to bullish. Okay, because over here it had 4 time frame. You can see that one price break above Ichimoku cloud. There's a side here. They're going to stay bullish here. Okay, if you want to use, usually I will just want to see, but since over here, I already know that price is going to revert from this level. Why? This is my support level. Price could not close below this level. You can see the rejection here, right? So you know that price is going to revert from this level. And another one is that price also, like break this high. Okay, they make a new high. Because if you look at market structure, price make a lower high here, right? Then you can see that price could not make a lower low. They make an equal low here. Then they continue to go higher, right? And then they break this high. Okay, price pull back. This is my buy entry for EU. Where is my TP? This is my key level. My TP should be around here. This is my pullback resistance level. Okay, and you can use EMA 200. Price break below EMA 200, you know you're gonna short from that level. And EMA also act as support and resistance. In this case, they act at the resistance level. Not all the time, but you can see that in higher time frame, EMA 200, if you want to put here, you know that, okay, you're gonna short. Okay, gonna short or gonna buy or go long. So you can use either one, but I like to keep my chart clean. You know, I don't want to see like there's so many indicator like there's so many indicator how, because some people say, oh, EMA crossover, you're gonna buy, you're gonna sell. Not always in that case, right? Because sometimes you can give you the false signal. Basically, back to the basic, have a clean chart, identify the key level, price on uptrend or downtrend based on higher time frame, and go to the lower time frame to execute your trade. Okay, just keep it simple. Doesn't have to like okay, some people, if you are good at those like, you know, high ideas and like key level, for example, if you are trade like ICT or SMC, if you were to look at the trading view, there's so many like trade signal like there. They like to identify that you need a break of structures, you know, break of structures. Okay, your highlight is really nicely, but in a real life, I know, but I don't like to, you know, write so many things here. But if you want to do like that, for maybe you show your friend, whatever, that is good. But if you want to just trade for your own personal like living by yourself, right? We look at market structure, we know already what is going on here. Okay, like over here, definitely for EU, we're gonna buy and buy because these are all buy entry, right? This is your buy entry, which I just mentioned here. Oops. Like here, your buy entry here. Why I put buy entry here? Then, but why price bounce from this level? Like I say, because they break this high, right? Based on like here, right? And you use Fibonacci, it's very powerful as Fibonacci. If you don't know how to use, please go learn. We also teach you how to draw Fibonacci correctly. And you can see that price bounce off at 50% fib level. You need to draw Fibonacci here and here, 100% here. No, 100% here. Starting point, ending point is 0. I set a template because I don't want like, you know, those trend line or whatever line to, you know, block my view. But this I'll just show you. Starting point 100%, ending point 0. Always draw your Fibonacci from your left to your right. You can see that 50% here, price bounce up and then continue to rise. Like I just mentioned, the target to be somewhere around here for my TP. Okay, so it almost toward the TP already. Okay, and entry criteria, which is this one. Let's say if you want to use Fibonacci I below 470, let's say if I go below 70, you're going to buy. Okay, but if you use moving average, which is 50% or 200-day moving average, which is you can use that as well. A lot of the trader, they will use a moving average cross like over, which is in this one, they said a 50. Let's just go for here, 50 EMA close above 200. These are the same moving average, but they not mention either SMA or EMA. Let me just go here and do together. I change this one to 50. Okay, based on this one, EU, let's just say EMA 200 first, okay? My blue color EMA 200, green color EMA 50. In this level, okay, when they close over, we're going to sell, right? This one, you can let you sell here. But why you want to sell here? Let's say not always in a case, right? You want to sell here at this level, what I can confirm, this is my sell entry. You always go look to your left. Is this your key level? No, your key level is somewhere around here. Okay, and you're gonna sell here. There is 50% flip level. Yes, good to sell. Price go below crossover, you sell here because we have 50%. If you know how to use it, 50% you're gonna short. Or if price cross above, you're gonna buy. EMA 50 cross above bull line, you buy. You buy here, what you buy? If you know how to read, we're going to buy here because this is our resistance level. Okay, break above, pull back, it becomes support. So you're gonna buy. This is your buy entry, right? Buy here. You can see that price close above here, you're gonna buy. Price, this is your bullish engulfing candle. Okay, this is your key level. Resistance, it become pullback, it become your support. For support here, then you're gonna buy as buy. Okay, but to me, I don't trade based on EMA cross each other because it give me a false signal. This is just example. Or you want to use the eyesight. Okay, now eyesight they have the kind of like the filter here, like overbought or oversold here. You can use the eyesight to trade divergence, or you can use the RSI to price oversold here, bought here, oversold here. For example, here price is already above 70, and then you can see that you are using a 4 time frame, so at the resistance level, so it's good to go, meaning that we want to monitor at this level, this one, and this is our key resistance level, right? Is here. Is here. Oh, here, right? This is you identify as your key resistance. Okay, if you trade you study demand and supply, this your supply zone. Okay, then you can see that okay, price above 70, we eye on this level. Okay, go to M15. Sometimes you don't need to go, you just short at this level, but usually I want to go to M15. I want to see what is going on here. Okay, I delete. Okay. Okay, this level is in H4. Okay, now what we can see here in M15, price come to this level. This is our kind of key resistance level. Okay, I look at market structure first. I remove this one, vertical line. Price make a higher low, right? Where your low? Where your recent low here? You know how to look? Okay, you go here, make a higher low, higher low, high, and they make a new what? They make a new low here. So basically, in M15, we know that it's good to short at this level. Okay, where is your entry? Your swing high here. Your swing high. Your swing low. Okay, we use Fibonacci. Price is at where? Price is at 50%. You're gonna short at this level, right? Your entry, sell entry right here. This is how you execute your trade. This is your entry here, 50%. Or sometimes it could go up to supply zone, some hidden base here. Like, you know, this supply zone. Rally base, drop base drop somewhere here. And we have 50% here. Above 50, if price go, that will be 61.8% up there. And then you can see the price falling. How many pip? These are M15, but this a key level is H4, right? And then you see that price also confirm that close with engulfing candle as well. Short position, enter here, target this level. SL above is 1 to 4. Risk and reward is 4, 1 to 4. Okay, so you can see that this is how you see the market structure, which is price is already telling you that I'm going to reward from this level. Okay, when price approach your key level in higher time frame, go to M15 or M5, M30. Okay, see whether price is either make like confirmation like bearish engulfing candle, bearish divergence, price make a chart pattern, and my confirmation is where break of structure, channel character here, pull back my price action right here, and so when line up with 50% fib level, and then you short from that level. Where is your TP? You just target that this is the first TP, and the next TP you target at H4 time frame, which is maybe this the second one should be this level. Okay. TP, can see that these are level. Why I pick this one? This is my support level. Break below resistance, rejection, pull back again. Now pull back support. Now price come and hit your TP. Okay, any question? Let's continue. Oh, let me see if anybody asks me on the app. All right, continue to the slide. Where is that? Okay, exit criteria we already say, or enter and exit. Okay, where you in exit? Don't talk about moving average because like I say, I don't use when it cross below crossover. But again, you can use either if exit 80% and then you should already kind of like monitor whether you want to exit your buy position or long position or not. Okay. And position sizing, use a fixed dollar amount per trade adjusted for risk. To me, I like to use fixed dollar for the amount. I don't really want to like use like how many percent. If you want to ask me how many percent I use, I say maybe 1 to 2%. But let's say if 100, if like 1,000 account, 100 account dollar size here. Okay, I'm willing to lose $300. There's an EA for you to help you to calculate the position sizing based on your capital. Okay, the EA you can just maybe go and Google. Okay, but that is the EA, either free one or you can pay one. Okay, the EA is called trade management or trade assisting, something like that. You can find. I think there are for MT4 and MT5. You can use that as well. So you just put okay, I'm willing to lose like say 300%, and it will help you to calculate like how much your loss size. It could be 0.5, and where you're going to put stop loss at TP, they will help you to calculate as well. Okay, reviews. Okay, you need to have the review your performance weekly and adjust the plan as needed. I used to do that, but because now I got so many things on hand, so I don't review my performance. Okay, my performance is based on the profit that I make, like weekly or monthly. Okay, but of course, someday I might hit stop loss, but overall, if you still within profit, that is okay. It doesn't mean like, it doesn't mean like today or let's say like tomorrow, yesterday, you earn 2,000, let's say 2,000, and then today you lose 1,000. Okay, then you feel like so upset because your mindset you want to like win consecutive day, you want to win like every day 1K 2K. But let's say yesterday you lose, let's just say yesterday you earn 2,000 and then today you lose 1,000. That is okay because you're still in profit. Okay, don't no need to okay today I lost 1,000 and then maybe I want to you know I want to earn back during the New York section. You shouldn't have that kind of mindset. If you lose, if he stop loss, just forget about it. Relax. Tomorrow you come back again. Okay, like I just mentioned, doesn't mean like you look at the computer for the 8 hours, you trade 8 hours, then you earn more. Maybe at the end you lose more. Okay. And the next one, step to create a trading plan. Again, you need to have self-assessment. You need to assess your trading style. Like I say, you ask yourself first whether you are swing trader, you're a day trader, or you're a scalper. Okay. Risk tolerance, you need to know financial situation. Okay, don't use the hot money or you borrow the money from other people or other bank. You take the money from the credit card, you trade. That is very no. You should trade with the money that you're willing to lose. Okay, don't borrow the money to trade and then you think that you put 1K, you want to earn 10K. No, that is not the right mindset. Okay, set a clear objective. Define your clear, achievable trading goal. So basically 1K, I want to achieve 3K. To me, that is possible. You want to earn $50 per day, that is really achievable as well. 50K, $50 to $100 achievable. And after that, you can go your account. If you have a 10K account, okay, 500, that is easy money. Okay, but of course you need to have a knowledge. Okay, it takes time for you to be there, for you to be a success in the forex market. You need to you need to have a confidence. Okay, how many times you fail, that doesn't matter, but you need to study, you need to have a knowledge. Whatever strategy you want to learn, just go and learn. There's so many free webinars in the YouTube, or you come and join the Wednesday, we will teach you whatever we teach you guys. I'm using the strategy to trade. Okay, and implement risk management. So you need to have a risk management rule. You set the rule how many percent you want to lose. You can lose per day. Let's say If today I lose $100, I'm not going to trade anymore. That is a good mindset. Okay, not that you lose 100 and then you come back again during the New York section and then you may lose more. Okay, you just set this account. I lose $100. I don't want to trade. Tomorrow you come back, then you trade. Okay. Plan trade entry and exit. Define your entry and exit criteria. You need to know where you're going to put stop loss and take profit, which I just mentioned. Okay. Test and define. Back testing your plan. Make necessary adjustment. Okay. Talking about back testing. Back testing. When we join the market, they say, okay, back testing your strategy. That is the one you should do. But based on my experience, back testing, if you have time, you can. But to me, back testing, we use the old data, right? We use the old data to trade. Again, the old data doesn't mean like they will relevant as of now because the market always changing. Okay, market condition always changing. So back testing, I not like very. I mean, I personally don't do a back testing or that strategy. I do forward testing, meaning that as of now, I interested in this strategy. I use that strategy to trade, and then I keep the trading journal. I don't want to see that this strategy give me how many lose or how many win, kind of that kind of like mindset I have. So back testing, I don't do a back testing anymore. To me, one is like wasting my time. Second one is like market condition always changing. As like I just mentioned, like we use the old data to back testing the strategy, but now your market condition is different. So to me, back testing, I'm not doing anymore. I do forward testing. But if you have time or you have your own strategy, you can use that. Do the back testing. Okay. So then I leave it up to you. Either you want to do back testing or not. But to me, I do forward testing. Okay. I do forward testing, which I keep the record. I do the review, which is if I study pick up ICT strategy. Okay. Usually I will I did last time I used to do the Excel file. Okay, I have to do like Excel file, which is today how much I win, how much you lose this trade, how many pip I lose, something like that. I used to do that, but not anymore. I review because I want to know that this strategy or ICT that I learned, okay, it give me profit or not. Okay, and then I will go back and I look. Maybe I do just 1 to 2 months, and then I see that okay, overall it give me a profit, and then okay, this strategy is work for me, or maybe it work for my style. Okay, then I will use that strategy to trade, and then you keep practicing, look at the chart, and then you'll be there. Okay, any question? I pause here for a while. Any question you wanna ask me? Okay, we still have like 10 minutes. Okay, no stop loss. Again, we know already if you trade and then you don't have stop loss, that is the no. You might have stop loss to protect your capital, right? Because it helps you to prevent the last losses. Without stop loss, trader risk experiencing unlimited losses. But but sometimes, okay, just for example here, we put your stop loss here, okay? Then you told me, oh no, I have stop loss every time I put my stop loss here, for example, okay? Let's say I just put here, for example, I just put my stop loss here, for example. And then I have a buy position. I have a sell position, sorry. I short here. Then you will argue with me, no, Peggy, every time I put my stop loss, okay, I will show you example. I have the sell entry right here. Then you put the stop loss here, for example. Sell entry, for example, you sell, okay? You sell here. I have my stop loss and TP very clearly. I said that according to EA, I put how many stop loss, pip, I have everything. Then you add at the computer, right? You sell here, and then price keep you want to short, right? Price keep rising. Your stop loss here. You need to see the price approaching your stop loss. What you do? You shift your stop loss up, right? You shift your stop loss up here. Let's say price keep rising from you minus. Let's say you minus 100. and keep rising. If hit your stop loss, you lose how much? Let's say you will lose 200. It keep tailing up, you keep changing. Enough, you burst your account. So yeah, if you have a stop loss, you should know what. Then you should ask yourself why you put your stop loss here. For example, why you put stop loss here, or why you put stop loss here. What the reason? That's why you must know where to put stop loss, where to put the take profit. You ask me why I put stop loss here. Oh, because above here I do have another supply zone here. If I were to short here, but price keep rising, okay, I already manage your lot size. Okay, I'm willing to enter a few lot size here because over here I have maybe 0.03, for example, 0.3. Okay, I'm willing to lose one lot. Here I have 0.3, 0.13, so become 0.3. But if price go to this level, because I know this is my supply zone here, okay, I will still have another lot size here. But my stop loss here because I put above my supply zone. Okay, and then where I put my take profit here because this is my kind of like overlap pullback support. So I think that price could come here and hit my TP. Okay, if price keep rising, this is another layer zone for me. Okay, that's why when you want to trade, you should know why you sell here, why you put stop loss here, why you take profit here. Ask yourself, not based on your feeling, not based on your feel, oh, I feel this is a good level, I short here, or I think that maybe price come here, this is my TP, or I put stop loss, I don't know, I just want to put 50 pip, I don't know. People say just put above 50 pip, 30 pip. No, not that kind of like fixed stop loss, meaning that need to be dynamic. For example, like you want to put here, you know that, okay, why you put here, okay? And emotional decision making. So no stop loss, like I just mentioned, it lead to big losses, right? So you need to know how to manage your emotion as well. Inconsistent result, no stop loss, how you're going to have the consistent result. So lack of consistency, trading without stop losses can result in inconsistency result. So actually this is about all trading plan you need to have. Okay, so no stop loss, making it difficult to achieve a long-term success. So every time please put the stop loss. Okay, and don't adjust your stop loss according to if price reverse to approaching your stop loss. Just stick your stop loss. Here's your stop loss. It's okay. You wait for the next entry. Okay. Okay, the last one, just want to touch up on why trade management is important. Like I just mentioned, control your risk. Okay, limit the percent losses, manage all risk exposure, maximize profit. You lock in the profit, maximizing return, manage your emotion, improve your trade efficiency. So that's why you need to have trade management, and then you need to know how. You need to go and learn about trading psychology also. Okay, so you need to know all this. Any question? So far, that should be end of the webinar today. You can ask me any question you want to ask. We still have 5 minutes. You can ask me anything about the trading. Okay, I can share with you guys. I can talk on and on because I got so many I learned from the failure. I learned like so many things. Like I just mentioned, when I enter to the market, I don't know where should I start. There are so many people I follow the social media. I follow the YouTuber that got told me like ICT is a good as well. SMC also good. Harmonic pattern also nice. Fibonacci also nice. Then you end up you don't know where to start. Like just keep back to the basic. Okay, first just identify the key level, don't ignore the fundamental. At least you look at Forex Factory every day, what is the new. So okay, any new you need to take note of. Then try to avoid trading news, but if you want to trade during news, just have the separate account. Okay, don't put the money in one account. You should have a separate account. Okay, and don't have the mindset is that you put 1K and then you want to earn 10K. Okay, that is just spam. Okay. Okay. this is all how to become a successful trader, and this is common 7 mistake that a new trader make. Okay, just go and learn and study. I just launched a poll in Zoom, so guys, please help me vote. Okay, any question? I still have 4 minutes. Let's just do a trade setup for Go. Okay, let me pull out the not a Zoom. Where is my chart? Okay, let's identify the key level. Now Gold is rising very strongly. So you can see that my first resistance, I say that if price break above 23.40, price will be this is gonna be my sell entry right here. They're going to my entry, this is my sell entry. So it's invalid. I will remove. No, I'll leave it 70%. Okay, so in here, this I identify at my pullback support level. Okay, this is gonna be my second support. Okay, so I want to see if price, maybe I can use what we can use here. We can use the extension in this case to see price already break the high. What that will be my 161.8. Okay, so now I'm waiting to short at this level, which is my sell zone for gold tonight. Which is tonight we have a news, so high impact news. Just have to be careful. My sell zone, I'll just put 2350 to 2355, meaning that when price come to this zone, I want to see the rejection in the lower time frame, and then I will trade according to this level, meaning that I'll go to the M5, even M5, M15 to see if price come to this level, and I pull out the I side. Okay, I want to see rejection here, or price kind of like mega either they kind of like make a higher high like that. Indicator is mega lower high. These are bearish divergence, right? Or price have the kind of like rejection like that. Okay, the long wick, a lot of rejection right here, or price make the higher high. They break below this high. Pull back, I'm gonna short, something like that. So I want to see what happening in either M5 or M15 is the same. Okay, so this is a level for gold. Now gold is approaching to our sell zone in H4, which is here. Okay. Okay, guys, that's all for today. Okay. Thank you so much for your time. Nobody vote. Never mind. Okay. Thank you so much for your time, guys. We'll see you guys again in the next webinar. Happy trading. Okay. Take care. Bye, guys.